The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Hey, I'm going to go another day without the normal opening. I think probably through tomorrow at least. We'll see what happens when we come back on Wednesday. That's right, Wednesday. How about that? So we've got tomorrow, and then the next time I see you is Wednesday. What I'm talking about is I'm just simply getting over a bug. I think I'm doing pretty good, but I can just tell that the energy level is still just not completely there, let alone I really don't want to start the hacking. Because when my hacking starts, it doesn't stop for, 10, 15 minutes or what have you, and it'd be sounding. I need a hack button on my microphone. But look, thanks for being here. This is Steve Rhodes of TFNN, the Trader's Edge Show. Today is Thursday, December the 20th. So let's go ahead and get looking at the markets. Of course, you can always give me a call, so that's not going to stop me from being able to chat with you. 877-927-6648. If you can't call in, you can always send me an email. We've got a couple emails. Tom and Lee have sent in an email, so that's another way to do it. If you do send me an email, steve@tfnn.com. Inside the subject heading of that email, if you'd be kind enough to put radio show question, that way I can get right to your email. And inside the Tiger's Den, any kind of ping will do, private or public. So right now we've got the Dow trading down 421 points, 22,902. S&P's off 37, NASDAQ 100 off 102, Russell down 21, semis off 13. So it's a mean and red across the board. Spot volatility index right now is up 9.66%. That's trading up 247 at 28.05. Gold is up $10, so relatively strong and trading above resistance. I believe that's 12.56, so about $10 above the resistance level. Silver's up 2 pennies, so not much movement there. Light sweet crude is up nearly $1, trading at 47.20. Leading the charge to the upside is Tilray, the pot company, up $6, nearly $6. They're trading at 76.81. Sanderson's Farms, it would make sense. They're probably selling a lot of, this time of year, a lot of pigs. Yeah, they not just chicken. I think they're in the pig business too. Out there in either event, they're up $5 and 5%. Credit Suisse is up 4. Vertex Pharmaceuticals up nearly 4 to the downside. Amazon leading the charge dollar-wise, off $48. Booking Holdings down 25. Chipotle off 26. That's 6% to the downside in Chipotle. Google is off 14. ABIO Med down about 14. So certainly plenty to look at, but let's get right to the questions out here. The first question coming from Ruby in the Tiger's Den, who wants to take a look at the January contract for gasoline. So, I know that gasoline keeps coming down. I haven't seen it in my pumps, so to speak. Yeah, it's down a little bit. I saw David White had posted something. He's got something right there in the Tiger's Den right now. $1.99 for gas, and I think that was David. You said that was like your Sam's Club. So even at our Costco over here, I'm on the other side. I'm on the southeast side of the state of Florida. It's like about $2.60 or something like that. There must be just huge transportation costs between Clearwater and the Boca area out here. But, hey, it is still less expensive than it was, just several months ago. Well, look, if we take a look at what gasoline is doing here, Ruby, if we're looking for levels of support, and we begin by looking at the longer-term time frames, there was a brand-new profile that formed last week, and prices trading below that. And that is 1.4176. You're trading 1.3536 right now. So there's no support in sight at this stage here from a weekly standpoint. Peter in Park City, he's paying $3 out there. So huge pipeline issues out there, Peter. Now, I don't use regular. I can't remember the last time I put regular in there. So, but it is interesting in the state of Florida because the West Coast, so David's in the Clearwater, St. Pete area. I go over to Naples fairly often. It is, I fill the car up with gas over there versus here, if possible, because it is just simply so much less expensive. kind of hard to figure it out. Yeah, rip off the tourists, screw the locals. And they should give us a local card, right? In any event, back to gasoline. If we were to look for some type of pattern, and what I have to do is probably put up the continuous contract, but right now, it looks like gasoline is headed towards the lows in May of 2017. We're actually trading into that level. That'd be about $1.30. And if it gets below that, Ruby, then what you're looking at is price moving back into the January 18th area. That's right around $1.08. January of 2016. January 18, 2016. Yeah, that's what we're talking about out here. So you've got this waterfall to the downside. No support on the weekly and no support here yet on the daily time frame. Very similar to the stock markets. If we look at the equity futures contracts, no support from a profile standpoint. That's one of the things that we're looking at here. On an intraday time period, I don't know if you're looking to buy or sell or you're long or you're short out here, but price is trading within a range. That range being, from an hourly standpoint, brand new profile that formed this hour. So at 1 o'clock, maybe it was at noon, and that's between the price level of $1.34. That's your support area. Your resistance is at 1.385. On a 4-hour time frame, the support level's at 1.352. So if the 134 level gives way, then what that's telling you, Ruby, is there's no support or no floor that we can see at this stage. It goes back to those longer-term weekly swing point areas that we took a look at. So that's what Stevie sees when he takes a look at the January contract for natural gas. Let's go to those email questions. Let me see what we have out here. The first one coming in. Oh, now we got a few of them. The first one coming from Tom. Yeah, he got it, 1234. First one, and we're going to use the FIFO system for responding to email questions out there. So Tom says, good afternoon, Steve. Good afternoon, Tom. I entered a long position this morning in SPXL. So that is long, the S&P 500 out here. Let's go take a look at what that is doing. So Tom is in, or potentially in, at about 31.93. It's at 32.01 right now. We're looking for a little pop in the market. Christmas rally, yep. Ho, ho, ho to you. What do you think? I may hold it until the end of the year if it starts to move. Wow. Well, that's from Tom. So Tom is of the belief that it is not that it is not the Grinch that arrived yesterday. He is of the opinion that it was just one of Santa's elves. Jerome Powell, one of Santa's elves. Now, Tom, I think you're in the minority out there, at least with regard to the folks that are on the boob tube out there. Now, I don't really think he's doing a bad job. I think that the interest rate issue is so overblown. It is so, but look, the reality is people will talk themselves silly into anything. They just and then they buy into their own story out here. But I don't think it's an interest rate issue. But your question is, let's get to it. Is there a chance for a pop? So when we come back from this, break, I'll answer that question. We won't do the deal or no deal. I actually watched this segment last night. I watched a guy. He had two cases. One was $750,000. The other was $5. He didn't take the $330,000 and got $5. He got coal. He's like the bulls right now in the market. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Yeah, I was watching the football game. What a football game that was. Just kidding you. It was Ohio and San Diego State, I think, out there. And then I must have hit my, you know how on the remote you've got that previous channel, which for me, no surprise there, is CNBC. And up came Howie Mandel in that game. So it was on. It was towards the end. I said, let me just watch one of these segments out here. And so young guy, young family, cool story. But this was their holiday edition version of it. And so the guy gets down to 2 cases that are left, one with $5 and one with $750,000. And I just think he got so caught up into the show and the whole no deal thing that he just didn't really stop to think, because I think the offer was $330,000 or something like that, and he could have at least countered, and he didn't even do that. which just told me that he just really got so caught up into the antics and was so certain. It's like in any event out there, like that's not what Tom G called to talk about. He didn't call, but he sent an email. But this is the way we kind of talk to each other, right? In today's day and age out here, email, text, and so forth. So, Tom, what I've done here during the break is I just simply popped up on my screen a 5-minute chart for you. And the reason is because if I go down to like my 30-minute time frame charts out here, what I don't have, well, let me just make sure. Let me hit the update button here. Now we're going to see a white screen. Maybe I do, maybe I don't. I need to hit the update button. It's kind of like my deal or no deal. Let's see if we've got a deal out here. And the deal that we're looking for is see if price has been pushing down lower with less relative energy out here. Probably I shouldn't have hit the update button right here on this screen, because I don't know why this thing is so. There we go. Oh, there is potential deal. So price was pushing lower with less relative energy at noon out here. And so this is on a 30-minute time frame chart. Your preference here on a 30-minute basis, Tom, write this down, is you'd really like to see price not close below 24.68. That's the bottom of a profile that began at 1 o'clock. It is bullish in structure. So in theory, price ought to be able to hold 24.68. Right now, price has been struggling to get above Stevie's red line. That's at 24.82. So you'd like to see price get above that, and then you would see price get up into the 25.07 level. Here's the deal. If your trade is going to work out, let's say that was a bottom signal at noon out here. If your trade is going to work out, what you want to see it do is close above the session from 21:30 hours last night. I believe if I go ahead and I do the math on that, that's like 9:30 last night, and it looks like the price is 25.14. For whatever reason, my button on my mouse, here we go, it is 25.14. And that's where the bounce this morning at 7:30, excuse me, found resistance. That was at Tom DeMark setup trend line. So subscribers and I was up at about 4 o'clock this morning, and subscribers and I at 6 o'clock when I began just assembling the newsletter. So it took me maybe a good hour and a half to assemble everything. No, it was before then. It was around 6 o'clock. It was around 6 o'clock when I looked at this. That might not have gotten out until 7, but we identified the green dash line that Tom DeMark set up trend line as an area of resistance. Said, hey, if price gets over that, then we'll have a strong counter trend rally this morning. Well, it never did. It found resistance, which is normal, which is natural. So, Tom, that line is still in play out here, and I think that's how you gauge your trade in SPXL during the rest of the day. If price gets over that, it doesn't mean you're out of the woods, but that's what I would be looking for. That's your resistance level. If it doesn't, then I say you have a decision to make out here. Look, I can give you all types of oversold indicators out here. Maybe not all types, but I certainly can give you a few. That was one of them on a short term. There's certainly patterns out here when we take a look at the daily time frame charts. For example, you're trying to go along the S&P 500. If we take a look at the ES Mini, it's made at least the 1-to-1 A to B equals CD. That's the problem. It's at least the 1-to-1. That was 24.78. It's made a butterfly 1.618 butterfly expansion pattern out here, but price can still go lower. When you ask how much lower in A to B equals CD lingo, that lower area is 23.84 out there. And I suppose that if the Congress can't figure out what to do, or Congress and the current administration can't figure out what they're going to do about a budget, that probably could send prices lower. So you know what to watch for the upside. Downside, you've got a downside target out there. I doubt you'd want to hang on that through the end of the year out there. So that's what I see, Tom. I hope that, excuse me, helps you out when taking a look at the ES Mini. See, I told you, you really don't want to hear me coughing. Because once it gets going, it's hard to shut it down. I guess a little bit like myself. All right, sorry about that. So Lee sends in a question here. Lee says, see what Lee says. Hi, Steve. How's life treating you down in sunny Florida? Beautiful. Can't you tell I got a cold? How do I get a cold in sunny Florida? So Tucker wants me to do the whiskey. Tucker, I don't drink hard alcohol. Sake, sure. Whiskey, no. Probably if I do a shot of whiskey, you'll hear a lot of slurring out there. Excuse me, a lot of slurring going on, and it probably is not really good. But how's life treating you down in sunny Florida? Pretty good. I have a question for you. I just read a report saying that small cap stocks will not participate in a stock market recovery next year in 2019. Can you give me your latest thoughts on the Russell 2000, and if you agree or disagree? Why? Well, here's what I think we can say. Let's try to do it this way. Because you ask a good question. If you ask a question, I'm going to go ahead and give you my best answer that I possibly can. And that is this. So let's take a look at this chart firstly. This chart here is, even though it's not of the small caps, I don't think if we get one market right, it'll bleed into the other. So I'm looking at the Dow just simply because the chart's already done, and it's pretty easy for me to do this. So here's a weekly time frame chart for the Dow. Week is not over. And what this is showing us is four different consolidation areas inside the Dow. And this takes us back into the 2003 time frame. So 2004 to 2006 time frame. Now, during 2004 and 2006, coincidentally, we had the Fed raising rates at every meeting, 17 or 18 raises in a row. So it's not like what we're seeing right now with the Fed is really anything different than what we have on my screen. So back then, and there was also repatriation going on at the same time. So back then, what we saw was a consolidation. Now, that consolidation lasted for 128 weeks. That was over 2 years, right? 2004 to 2006. The question is, are we in essence in the same kind of pattern as we were back then? Well, if we are, the Dow needs to get back above that February low. Otherwise, there's danger below, like 20,030. We come back, we'll further discuss Lee's question about whether anything will participate. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has launched our best sale of the year. The Tiger Dollar end of year sale runs through December 31st only. And right now you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Lee, What I have up on my screen right now, we'll kind of go back and forth, but I already know questions that people were asking themselves as they were listening to me talk. The first question was always, what the heck is he talking about? But the second question is, well, maybe something that he said just made you come up with another question. So remember, what I said was that from 2004, I believe it was June of 2004 to June of 2006, we had the Federal Reserve raising rates at nearly every quarterly meeting out there. In fact, it was every quarterly meeting, and it was a quarter point. And we just looked at, on my prior screen, we looked at the Dow, which was in a consolidation pattern. Now, I would think that most people logically would say, well, if interest rates are going up, they're going to go ahead and crush the small companies out there, the small caps, who are more prone to loans that are tied to floating rates inside their bank institutions. So in this case here, and maybe your article even alluded to that. I have no idea if it did or it didn't. I usually think it will, because I think people are so much want to blame what's going on in the markets based on interest rates, which I will tell you, I will take on anybody and show them that they're just full of it, that there's just nothing historically that proves that point out here. In fact, here, if we take a look at the Russell 2000, the bottom that we can see out here, which was in August of 2004. So again, it was in June of 2004 when interest rates started going up, and there wasn't. It might have been right around June 20th. There was an initial knee-jerk reaction, so to speak, for a period of weeks. Now, look, we've been already raising rates for years out here, and it made a low in August of 2004, and for those 2 years, the Russell 2000 went higher. Now, we don't have that going on right now. So what's going on inside the Russell 2000 is not about interest rates, let alone interest rates began rising in 2015. Remember the date? I think it was December, though, of 2015. I think that was kind of like the old Santa Claus delivering coal. I think it was towards the somebody out there probably knows, but I think it was December or so of 2015. And we're still above, at least Russell 2000 is above that area. But right now, on a weekly basis, what we can see out here, Tom, is there's at least a weekly A to B equals CD to the downside inside the Russell. Takes in a 1303. I'd have to say 1226 is a more likely target, because 1303 would be the one-to-one. But your question is, will the small caps participate in a rally? The assumption is that there's going to be a rally, right, in 2019. I think that's an assumption. We have to go back and take a look at these consolidating patterns. Now, here on this chart, you can see really 4 different consolidating patterns. One that we're in right now. The other 3, they lasted either 128, 82, or 88 weeks, respectively. So about a year and a half or so. Now, if the current consolidation is in fact a consolidation, and price needs to get back above the February lows to prove that, this is the first punch down through. Now, look, when price was trying to, remember that the Dow made a high in January of 2018, and price punched through that level for a period of days, I don't remember exactly how many days, but a period of days in October, as if it was going to go ahead and bust out the highs. It didn't do that. Now it's trading below the consolidation. The question is it real or not? I don't know. We have to find out. We have to wait. And we really do have to wait, not just to the end of this week. I think we have to wait until December 31st out there. So not next Monday, but the Monday after. If this is a real break of the consolidation, then we have a measured move level. And not until that measured move completes out there could we see a bottom. 20,030 is approximately that measured move level out there. That gets back to the basically around the lows of January in 2017. Now, Tom, it wasn't Tom, it was Lee. It was Lee. let's take, so that's the bearish case out here, is that the consolidation is broken, you're going to have a measured move to the downside. The bullish case is that price gets back above, as it did in October, got back below the consolidation. Now what takes place at the end of January is price gets back above. Maybe Tom is right, and there's going to be some type of Santa Claus rally going into the end of the year. The question is, where does that consolidation, if it is, does it get back above those February lows out there? And if it does, then we have more consolidation. And the real question then, Lee, is does price close above 24,719, the close of 2017? If it doesn't, then Stevie says this consolidation continues and we at least go back and revisit the lows, whatever they end up being this year, which could be the lows of today. Maybe it's tomorrow, maybe it's next week, or maybe price never gets back above that consolidation. So it's very clear. We know what to look for. We know what took place back in 2004 to 2006. We know it took place back from the time period of 2011 to 2012. We know it took place from 2015 to the 2016 level. And the question is are we doing the same thing right now? As we speak right now on December 20th, the answer is no. But I also know we have to give it just a tad bit of time out there. So hopefully I've answered your question. And if not, I apologize, but I gave you the best that I had out there to try to help you understand at least what the charts are showing us. And that way, it's not really an opinion. It's just chart patterns out there. And to the extent that you want to be a technician and take a look at chart patterns, that's what these things are showing us. So we've got Aaron writes in, and Aaron writes, hi, Steve. Can you look at the last 2 days action in GDX and the gold contract? Gold making new highs today, but the GDX is not. Is this a breakout or a fake out? That's a great question. I don't know that we're going to be able to answer that. Let's go take a look at it, though. One of the things that we do know, and I don't have, I don't want to waste your time right now because we've done this so many times, is we know, what I mean by that is I could go through the tools of bringing up my correlation chart, look at the directional correlation between gold and the GDX. Aaron already knows that. He pointed that out because there is a directional correlation. It doesn't mean that it happens each and every day out there. I usually look at the smallest time period as a 5-day average. So in essence, what that would mean is we would really want to take a look at the GDX then on a weekly basis, right? If we take a look at the weekly time frame chart for the GDX, just to try to take a look at the premise of the theory that you have out here. And so we can see on a weekly basis for the GDX, it's higher than the open. We're trading at 2081 right now. So in other words, Aaron, what you and I have just done is we've filtered out some of the noise. Now, if I go ahead and I put up the gold contract, which is up $11 right now from a weekly standpoint, this too is up. So let's not get too caught up into 1 or 2 days and say that each day is going to impact our bias with regard to correlation, because I just think that correlation is just, it's too narrow of a range to take a look at. And so therefore, gold is up on a weekly basis, and the GDX is up on a weekly basis too. So I hope that helps you out. We come back from this break. We could take a little bit further dive into the GDX. I'll see if there's any other questions as well. I'd like to hear from you, Steve at TFNN.com. Just put radio show question or give us a call at 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. So, to finish off GDX out here, Aaron, the resistance level in GDX is going to be 2051 on a weekly basis. So you and I were looking at a weekly chart for both GDX and for gold. And it is a resistance level. It's a resistance level. It was created by the gap to the downside for the week that began on August the 20th. Now, the reason that we know that that is a resistance level is because it's been tested a couple different times. Once during the week of October 22nd, and then a second time last week out here. Now, the gap to the downside had volume of 417 million shares. The first time it was tested with 280. Last week was 261. This week we're 301. So you really want to see the GDX close above 2051. Otherwise, our price could pull back to where I'd have to say the top of the weekly profile out there of 1971. If price can close above it, I don't know whether it will or it won't, but that's the level I would be watching. It's the level that I am watching out here. If price closes above it, then old resistance should become new support, meaning 2051 should become the new support area. So, Aaron, I hope that helps you out with regard to GDX and maybe sometimes just getting rid of some of the noise to help you say, the correlation really is still there. Let's just not look at it on a ultra short-term time frame. Your question was, is it a real break or a head fake? That 2051 is the level that I would suggest that you would watch to really answer that question out there as far as how this week trades. So thanks for writing in, and hopefully that helps you out. We've got another question here. This is coming in from Earl the Pearl. Hi, Steve. Is there enough blood on the street to go long? Get well soon. Well, if there is, it's not whether there's enough blood. It's whether there's enough cash, whether there's enough guts and glory in order to move the markets higher. There's plenty of blood that's out there, and the problem is that every time that we see a pattern that's associated with a bottom, a bounce, or a counter trend rally, that's all it turns out to, is a bounce or a bit of a counter trend rally. So I just simply say, Earl, if you didn't hear before when Tom and I, who Tom has the same, not Tom in the TFNN, but Tom G, he's looking for a possible bottom out here. And I would say the way that you would know that in the ES Mini, and we'll take a look at the NQ. That way I don't know what everybody's trading out there. But it would be the a close above last night's high at 930, and that's at 25.14 in the ES Mini. It's stretched. There's plenty of blood out there. This is not an issue of blood. This is about an issue of, is there plenty of green? If there's plenty of, I guess the Grinch would be green blood, wouldn't it? I don't know. Now we're getting a little bit too wacky out there. If we take a look at the NQ, what you're going to see is the NQ did the same thing as the ES. In other words, price got right up to that Tom DeMark setup trend line. Again, that was at 9:30 last night inside the NQ. That price point is 68.3250. Now we can see his price this morning was getting up there. At 8 a.m., it created that Tom DeMark setup 9 count. That set up this little red dash line here for support. That should have held. And at 11:30, that gave way. Just like there was resistance up at the top, the green dash line. Well, the Tom DeMark setup trend line, the red dash line, should have held. It didn't hold. So now, attention to that any longer, but I would be paying attention to the green dash line out there. Use the value of about 63.85. That's actually the top of a 30-minute time frame chart out there. So Earl, the Pearl, I think price has got to take those levels out if to accomplish what it is that you are looking at. And I believe that would mean that Earl wants to drink some of that blood. So we've got to classify Earl right now as a vampire. But I get the point out there. I hope that helps you out with regard to what to look and to watch for. As I mentioned, you know, there's plenty of signals, or there's several signals out here to say that the market is very oversold, none of which is probably as significant as, oh, geez, let me do this here, get all the way here, as this one. The advanced decline oscillator reading as we speak right now is minus 261. Minus 261. You get to minus 250, it's called extreme, baby. Now, not that it can't get lower than that, but in 2018, the lowest low that we had, I believe, was was the January low and then the October low. In October, it got down to minus 291. In January, at the first bottom, the first viable bounce bottom, got down to minus 365. It's really unusual. I shared with subscribers earlier, even during the bear market, 2007 to 2009, the New York Stock Exchange got down to these oversold extreme levels, and there was some type of relief rally. Sometimes not much, but there was still something that was out there. And Terry, you ask if is Powell nervous today? I don't think so, one iota. I'm in the camp that what he did was right. And you got to get rid of guys like Jim Cramer who overhype this stuff. Rising interest rates rising interest rates are good for the stock market. This is like saying that I don't know how many people are going to die today. And hopefully it's nobody in this listening audience or me specifically, if we have to get real. But it is the same thing as saying that everybody who dies today probably has used ketchup in their life. They probably go ahead and use ketchup with their French fries. I do out there, and then reaching the conclusion that ketchup is going to kill people out there, like rising interest rates are going to kill the stock market. It's just not so. It's just if you go back and look at the charts and everything, it's just not so. It's not so. And we just looked at it from 2004 to 2006. There's other time periods where we can go back and take a look at it. So, yeah, that's not it. That's not it. No, look. Oh, God, no, I'm not going to say look anymore. That's just my thought. Sorry, I just simply went ahead and got off base out there. So let's see if I can get back onto the base. Okay, so Sean writes in, I have no idea, but right now, a 786-point retracement on the Dow Jones would take you to the December high. I always do. I think he was kind of multitasking here. I can't completely. I'll have to read this. I think it's more of a statement than it is a question out there. So thanks for writing in, and I'll just have to take a look at that when I'm off the air, which isn't too long from now. Okay, so what else should we actually look at out here that is of interest to everybody in the listening and viewing audience? What should we look at out here? So bonds. Let's just talk about bonds out here. What are bonds doing? So with regard to Treasury bonds out here, looks like they've topped. And if we take a look at what they have actually done, then I got a question here. Could ZBH9 be topping? And yes, you must have been typing as I said. Treasury bonds look to me like they've topped. Now, I made a mistake yesterday in my calls at the guys at the Timer Digest track, and I'm still rated #1 for bonds there. And that is that I went to neutral yesterday. I had been long. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Back, folks. Now it's off about 4:51 out there, and the old polar bear and I were just kind of going back and forth a little bit with regard to, he said with regard to the interest rates, he disagreed because I wasn't taking into consideration, excuse me, the $50 billion that's coming off of the Fed's balance sheet out here. And all that I shared with him is I hear that out there, but I don't buy into it. Yes, there's money rolling off of the balance sheet out here, But what nobody really takes into consideration when they talk about the growth of the Fed's balance sheet from basically 0 to 4 trillion out there, and it wasn't from 0 to 4 trillion, was the mere fact that in that point, at that same point in time, we went from, in essence, really close to 0 to 2.8 trillion. 2.7 was, what was the actual top number out here? 2.7 in excess reserves out there. It wasn't no 4 trillion that everybody talks about on the balance sheet out here. It was just simply a bunch of watered down funny money shenanigans that was going on out there. So look, the thing is, none of us will be able to prove what is the cause. What we have to do is try to identify where things headed to, what patterns are out there, see if we can identify support and how things hold, whether you start seeing at any point in time some higher lows and higher highs out there. And that's really the role here that I will play for each of you, is each day, no matter what my take might be on what the market is doing out here, is truly each day show up and give you my best and take a look at those tools to try to assess where things are headed to. Just like that bonds may have topped. Why may have bonds top? Well, they got back to a prior level of resistance, this blue horizontal line. And they were doing it with price moving higher, doing less relative energy out there. Now, today's candle is not a bearish reversal signal out here. And the pullback inside of the 30-year could just simply bring things back down to support, which is about 143 to 144. We're trading at 145 right now. So I do see a bit of a further pullback, and only time will tell. Hey, folks, thanks so much for being here, putting up with my hacks, and stay tuned. Your favorite polar bear, David White's up next. Tom O'Brien, 3 to 5. And I'll do my best to be back with you on Fabulous, Fantastic Friday. Have a great Thursday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.